Well, we're here at Sharps Pixley, and it's a great privilege to invite Jim Rickards here to this bullion showroom, the first in London to actually make gold available, democratize it if you like, to the ordinary investor. Now Jim, gold's had a remarkable run this year. It's probably the best performing asset class of all assets.
Right.
Gold's just been nudging $1,300. What's your views from here?
Well, I think it's probably going to continue to go higher, and the reason is weakness in currencies. You know, the dollar price of gold or the sterling price of gold is just the inverse of the currency. So if you have strong sterling, it's a lower price for gold. Weak sterling is a higher price for gold. I see the sterling and the dollar, and the euro for that matter, getting weaker against gold. They might fluctuate against each other in different ways, but the people around the world are losing confidence in central bank money. When you lose confidence in central bank money, you look for other kinds of money, and gold's the best.
Absolutely, and people, I think, are focusing an awful lot on Brexit. To some people, that's noise. Now, that would be resolved one way or the other. The real reason for owning gold is for the long term, isn't it?
Right.
It's a long-term store of value, and that goes beyond these sort of narrowly short-term issues. As you're rightly saying, gold, and here's a kilo of gold here, right. £30,000 worth. Yep. That maintains its value in the long term. Isn't that the key story for gold?
That's right. Look, Brexit is a very significant event, but there's always something down the road. Even if there's Brexit, there'll be negotiations, there'll be other treaties, there'll be other new governments, there'll be new developments. There's always something on the horizon that will create some interest in gold. But the fundamentals, away from the politics, the day-to-day politics, are all in favor of gold. I've just come here to London from Switzerland. One of the things we learned is that some of the big refiners are having trouble getting, doré, which is gold from the mines, that there are actually shortages. They have a waiting list of buyers. There's shortage on the supply side. Well, the way to resolve that is a higher price. We both know that.
Absolutely so. Interestingly, a lot of the banks have been quite net bearish about gold, but if you look at the fundamentals, as you allude to there, even Goldman Sachs is saying there's about 16 years worth of mine production left only. So those taking a long-term view will see that win. So fundamentals can come into play.
Right. One of the things that I like about what you've got here at Sharps Pixley, Ross, I've been coming to the UK since 1979. It's one of my favorite cities, but this is my new favorite spot. You've created what I call the Bank of Gold. This is the way banking used to be. Someone can walk into your shop right off St. James, go over to the teller counter over there, hand over the money, and walk out with gold. They can store it here, or they can take it with them. Well, guess what? In 1840, you would have done the same thing. You could have gone to any bank in England, handed over your Bank of England notes, and they would have given you gold. So you've got 19th century banking, but I think it may be 21st century banking also.
It's interesting, here in the UK, when we've got an old currency, the pound is 680 years old. The average life of a currency is only 30 years. So for the average Brit, who has had a long period of economic and political stability, they perhaps don't quite get gold. They conveniently forget that Barclays Bank, one of the major high street banks, came within 30 minutes of going bust in only 2008.
That's right.
So those fear concerns are still very much with the investor. What we're looking to do here when we introduce gold to investors, they invariably call in or walk in and say, can I literally walk in and buy a gold bar? We say, yeah, and then they repeat the question, almost with a sense of disbelief that it can be so easy. And I think the important thing is that this is not just for the privileged few.
Right.
It's an asset to democratize investments for the ordinary investor, to buy the physical bar, take it away with them, and have something of intrinsic value. And I think that's the key point, isn't it?
Right. And your point, Ross, about the average life of a currency being about 30 or 40 years, that's true for those not backed by gold. The reason pound sterling had such a long life, is still going strong, is because it was backed by gold. And same thing with the US dollar, up until 1971. So I really would start the clock running for this 40-year life or so in 1971 when the gold standard ended. By that standard, we're 45 years plus into it, so we may be getting to the end of paper money.
Let me tell you when I start my clock, the day I was born.
Right.
Now, on the day I was born and to today, money has lost over 95% of its value. A pound has lost over 95% of its value. Money is not money in the sense of wealth preservation or a long-term store of value. Whereas gold, as we all know, bought the same in biblical times, in Tudor times, and today. Right. And I think investors need to have that very long-term perspective to understand the role of gold, and that's the important thing. Money dissolves, gold endures. Right,
and that's a very good point, because people actually don't always grasp the mathematics of it. You're right, money has lost 95% of its value, but it can lose 95% of what's left. Just because it's down 95% doesn't mean it's found a floor. People being born today getting pound sterling, they think it's a pound, and you could lose 95% of that, and again until eventually it gets to zero. Gold is always value.
Now, I think one of the things that's going to trip the market towards gold in particular is negative interest rates. Now, roughly a quarter of the planet is already living with that particular phenomena, and the point being, when you've got negative interest rates, getting a bill from your bank to say that for holding money there, the mere event of receiving that letter could trigger people's attitude towards holding money in cash?
Absolutely. You know, I'm very active on Twitter at James G. Rickards, and one of the most retweeted tweets I ever sent, I said, you know, in a world of negative interest rates, gold is the high yield asset.
Correct.
Because 0 is greater than -1.
Correct. And I think this is one of the things, you know, you almost need a physical event to occur to you to realize the role of gold. And indeed, many investors who come here, not always Brits, but, you know, they've had a personal incident in their life. We have a well-known Indian client who had £300,000 in a Cypriot bank account. And it dissolved, and he went to the manager and said, so what the hell? He said, it's gone, and I've lost 50,000, so what's your problem? And he walked out of the bank, and he thought, I can complain to nobody. And when you've had an incident like that, when you've had your money, which is a digital cipher, which goes to 0, it has an effect on you. Now, he had a lot of other money. He's a wealthy individual, but it reaffirms that when a crisis happens, it can be very fast, and very fundamental and very damaging.
Right. It's not just, you're absolutely right, but it's not just a financial crisis, it's also cyber financial warfare. Bangladesh, one of the poorest countries in the world, had $80 million on deposit with the Federal Reserve Bank of New York. Arguably the safest bank in the world. Poor country with 80 million at the safest bank in the world. It disappeared about 2 months ago. 80 million gone. Yeah. If Bangladesh had gold, they'd still have their wealth.
I think a lot of people look at gold as a sort of the Armageddon asset. I don't know it has to be that. I mean, there are countries around the world that live with high inflation. Think Venezuela. It's, you know, it's a safe haven with a weak currency. So you know, it doesn't have to be a bet against a very dark and dangerous world. Right. It can also be a hedge against, should we say, a modestly bad world. And I think it's the currency play which is quite important in that role, isn't it, as well?
I actually think of gold as a currency. When I look at the dollar, the euro, and the yen, there are forms of money. I agree with that. Bitcoin is a form of money for that matter, but so is gold. Yeah. So gold, I don't think of gold as a commodity or even an investment. I think of it as a form of money. If you want money, you should have gold.
It's interesting, you know, we have the Brexit vote coming up, and it strikes me that the younger generation perhaps don't quite understand gold the way the older generation do. And I think, personally, there's an element of giving up liberties going on. And this isn't a story about Brexit so much, where we're giving perhaps power to an unelected body, the European Commission. They're appointed. We also give up our privacy, think social media. And I also think that we're giving up our liberties, if you like, in relation to money. It's gone very digital, hasn't it?
Yes.
You can make payments electronically. Your money doesn't occur in cash form. And for the younger generation, perhaps they don't really understand this stuff, do they?
Right, and that's what happened to Bangladesh. It was digital wealth. You know, I live in a wealthy area of Connecticut, and you run into billionaires, and you ask them what they have, and they're happy to tell you, I've got stocks and bonds and this, and I say, no, you don't. You have electrons. They can be hacked and wiped out, and you'll have nothing left, like your friend who was in the Cyprus bank. But if you have physical gold, you'll always be in good shape. You know, my father was in China in 1946 in the occupation of China after World War II. And a lot of people know the Weimar hyperinflation, but Chiang Kai-shek in Nationalist China had an even worse hyperinflation that he lived through as a young man. When I was growing up, he used to pull out 2 bills out of his wallet, and he would say, read what they say. One said Federal Reserve note, the other said silver certificate. And he said, this used to be backed by silver, and this is backed by nothing. So I learned it at the kitchen table when I was a 9-year-old.
Well, I have some hyperinflationary money, a little pile of these $10 billion notes from various countries around the world. And I give them to my children with the one comment, never forget.
Right.
And never forget.
It's good advice.
Well, Jim, it's a great pleasure to have
you
here
at
Sharks Pixley.
Great to be with you.
Great to talk to you as well.
Thanks.
And thank you for watching.